The following is a paid program. Talk 103.7 WTIP and Cable Channel 7 welcome you into Financially Speaking with Jim Taunton. Find us live on radio, TV, the IBX Media app, and on YouTube. Just search Financially Speaking NC or get the link at WTIPFM.com. The opinions expressed in this show are for general informational purposes only and not intended to provide specific advice or recommendations for any individual. To determine what investments may be appropriate for you, consult with your attorney, accountant, financial, or tax advisor prior to investing. Securities and investment advisory services are offered through Genois Wealth Management Incorporated, member FINRA SIPC. Now, here's your host for Financially Speaking, certified financial advisor, Jim Taunton.
Hello and welcome to Financially Speaking. Jim Taunton here. Glad you joined me. And we actually have a guest tonight, so we're going to cut out a couple of breaks so we can give him as much time as possible. I've had him on a couple of times before, Peter Anderson with Anderson Wealth Capital Management, I should say. And Peter, you may recognize him. He is on every financial broadcast under the sun on a regular basis, but the pinnacle of his appearing on media is Financially Speaking. And I'm sure he will add this to his resume. Is that right, Peter?
Absolutely, yes. I'm rewriting the resume as we speak.
Good. Yeah, Peter is well known and very knowledgeable and can't wait to pick his brain. And first thing, Peter, you manage a portfolio that I use in my advisory accounts called Weathermark. And it is a very small portfolio. How many stocks are in that portfolio currently?
Currently, Jim, only 11, the most concentrated it's ever been. Mm-hmm.
Well, I will say that Peter's performance has exceeded every other strategist on the platform. And we're talking a fairly large number of strategists. And some of these strategists are people that manage multiple billions of dollars. But he's beat them all. And he's very nimble. And Peter, because you have a small portfolio of stocks in that strategy, I would call you a stock picker. What criteria do you normally utilize? Are you looking at company-specific information? Do you look at the macro picture more or less, or is it 50-50? What do you do?
We hardly look at macro forces. I would start out by that. That is sometimes shocking to people, but instead, we would drive ourselves crazy, I think, if we focused on everything, such as the macro picture and the individual stocks. For me, intellectually, and frankly, from a performance basis, it's much easier to focus on the individual companies themselves. Of course, you have to embed them in a macro environment, or at least their own economic environment. But then the research is far more focused. And I will tell you this, Jim, that I think I've told you before, I started out as a bond analyst many, many years ago. And I like to say that I'm a bond analyst that has been turned on to equity research. And I brought over all the tools that I learned from bond picking to use in stock picking. And I would say that that is the most different thing about me compared to any other equity stock picker out there, is that I tend to use and look at the world through a different lens. And that many times gives us an advantage, a little bit more insight than, say, a traditional stock picker.
So you were proselyted by the equity universe from the bond universe.
Very, very difficult to do also, I would tell you, just culturally, in our large investment firm cultures. It's extremely hard to change careers.
Yeah, I've heard you speak several times, and one thing that always rings a bell with me is the fact that what you've carried over from the bond universe to the equity universe is free cash flow. That's something that's very important to your, not your algorithm, but your metrics that you look at with a company. They have to have a very, very large cash flow percentage-wise.
Yes. In addition to that, we also look at their debt and how much debt they have. If there's drowning in debt, for instance, that's an issue. But even in cases where they may be drowning in debt, if the cash flow they're generating is enough to pay the enormous bill, then we're not as worried about a company as we would
Right.
be in the opposite case, say a highly levered company, but then the cash flow is dwindling. And so you worry if
Mhm.
they're ever going to be able to pay their debts, for instance.
It's like if you look at an individual's situation and they have a $500,000 mortgage outstanding without
Mhm.
any, without looking at anything else, you might say, man, that's a lot of money. But if they're making $1 million a year, and they've got 3 million stashed away in a money market over here, it's not
Mhm.
a big deal. They've got the money to
That's
pay it.
exactly right. Yes. And we often compare ourselves colloquially to, say, a local mortgage broker that when they're selling mortgages to individuals, they really like to know as much as they can about the individual, right? The credit and the certainly the character of the borrower. And so those things provide us insight into how the equities will eventually, we think, eventually will
Mhm.
respond to an improved balance sheet, improved cash flow. But sometimes it takes a long time. It can take over a year between when we identify a company that we think is doing very well, but
Mhm.
the stock world does not recognize it yet. So let me give you just in that analogy. It's almost as if you have lent that $500,000 to the homeowner, right? And before anybody else knows, that homeowner calls you and tells you he or she got a big raise. And that big raise makes you sleep even better at night as a lender because you say, wow, now I'm
Mhm.
really locked down with the ability for this person to pay down that mortgage. And so that's kind of the insight that we look for because other people that are not familiar with that person would not know that level of personal information, and they wouldn't see how improved their financial picture has become.
Right. Very good.
Hmm.
I'm going to get out of your comfort zone tonight a little bit because you already said that macro is not something that you look at intently when
Yeah.
you're picking stocks, but
Yes.
you keep your finger on the pulse of macro just like I do and every other investment person does.
Yes.
You listen to news, you get on news conferences and webcasts and
Hmm.
Zoom calls and things, and you hear what people are saying, about the economy and other things. So yeah, you do have a working knowledge of that. And I
Hmm.
want to talk just a little bit about tariffs
Hmm.
because that is maybe the hot topic in the news these days. And I'll share with
Absolutely.
you, Peter, what I shared with my listening audience some weeks ago. Uh, Over a dozen presidents have used tariffs in various forms and for various periods.
Hmm.
Democrats and Republicans. This is not a political animal. This is not tied to a political party. Tariffs are just a weapon for a president to utilize to level the playing field. That's really what it's meant to do. And of course, what Trump does too is makes us rich. But we'll see about that. But
Right.
tell us a little bit about your view of tariffs
Yes.
and what you've
Yes.
seen of his policy so far regarding
Sure.
tariffs, and how do you think that might affect things?
One thing that should calm us down a little is that this is not our first rodeo with President Trump and tariffs, of course,
Yeah.
because in his first term, we sweated that out on round one and seemed to come out okay. So at least we have some experience. But I would tell you the market right now and the general public is acting as if this is our first rodeo, that we have
Right.
no experience looking at tariffs or analyzing them and trying to project how they will impact everything. And what comes to the rescue, and I'm saying that a little bit sarcastically, are the tons of economists out there that are modeling all the impacts of the tariffs. And I'll be honest with you, Jim, I just think it's a fool's errand. I don't think that we will be able to, via a computer, figure out, and with esoteric analysis from PhD economists, I don't
Hmm.
think that's going to give us the answer. I think a more pragmatic answer is And an honest answer is we have no idea how the tariffs, if they're put in place, how they're actually going to impact the economy this time around. And
We don't.
instead, we have to do this empirically. In other words, I think if he does levy the tariffs and actually turn them on, I think what he'll be doing is watching in real time the experiment and how this gives him feedback. And rest assured that if it's not in the U.S. best interest, he will pivot. He will make some kind of a change. I'm
Mhm.
fairly confident about that, but I'm not confident about listening to economists telling us how down to the very basis point or the penny, how these things are actually going to play out in a projected manner.
Yeah, and I'm not confident in higher taxes and larger government getting us there either. So
Mm.
I'm happy about some things that are going on. I will share this data with you, Peter. In 2017, which is the year after he was elected, actually the year he took office, we saw an immediate acceleration of GDP from 1.8% growth to 4.6% growth.
Mm-hmm.
Now, if we go to a 4% growth in GDP, we can afford a little inflation. And more
Mm-hmm.
than likely, the tariffs would cause some inflation. I mean, that's
Mm-hmm.
kind of common sense there. But that would not be a problem with a 4% GDP growth, would it?
Absolutely not. And with regard to inflation, too, that has been the topic of much discussion for years, actually. And even before Trump was elected, there was a lot of concern about what the Fed is going to do in terms of if inflation doesn't become controlled. And again, hours of analysis on this, where at the end of the discussion, you say to yourself, well, have I learned anything? And I'm not sure we ever do. Some of these things are they're not a science. There's a lot of behavioral aspects involved in it. And I'm not saying we can ignore it. Of course, we have to have this discussion about this. But
Mhm.
my confidence in terms of making any investment decisions, playing investment decisions based on these outlooks, I would caution against that simply because the outlooks have so many different uh, outcomes that are possible, frankly.
Yeah. Yeah, I tell clients all the time, you never change a long-term investment strategy
Mhm.
based on short-term circumstances. And
Yes.
almost everything you see in the news is short-term circumstances.
Yes. I mean, let's also just talk a little bit about that, too. I mean, I'm sure your viewers and listeners will identify with these types of headlines we see now on the financial press. It would be something like this: the market has its worst day since, and I would say, Jim, probably 10
Last
years
week.
ago.
Yeah.
Yeah, exactly. But 10 years ago, it used to be meaningful. It would say
Yeah.
worst day in 10 years. Now it's the worst day in February as we're ending
Right.
this month. And
Exactly.
it's
Exactly. I get tickled about
obviously,
that.
yeah, it's obviously for headline grabbing attention. I mean,
Yeah.
the whole dynamic of covering the financial markets is complicated if you're a public
Yeah.
company, of course, because there's profit motivation in covering the markets.
Yeah. Yeah. Just like you do, Peter, I watch the financial networks on a regular basis, and it's comical. In the morning,
Mhm.
the market is up a little bit, so
Yeah,
they've got everybody on talking about why the market's up and why it's going to
yeah,
continue to be up, and why you need to buy. And then at about lunchtime, the market turns, gets a little negative. Then they have everybody on in the afternoon telling them why the market's negative and why you need to get out and be cautious and
exactly.
all that.
Yes, yeah,
It's
right.
crazy.
It would drive a day trader crazy, but of course, we
Yeah.
know many people that have that kind of personality that enjoy that, and that's more like a casino type environment rather than what you and I do, which is a longer
Yeah.
term investment process that's disciplined and tries to be as objective as possible in this crazy world that we're in right now. I mean,
Yeah. I agree.
Jim, I don't think we can overestimate, and I think you and I talked about this earlier, how dynamic the situation is right now and how many sledgehammers are being juggled, frankly, in terms of the different focuses that the administration is taking. I'm not criticizing them. I'm just making an observation that it is remarkable how many agendas are simultaneously being
Yeah,
implemented.
you're exactly right. I mean, I was just listening today about the deal being made with Ukraine for rare earth
Mhm.
minerals and
Yes.
oil, and then
Yeah.
you've got the tariffs going to be creating some income. I mean, the government's going to be awash with cash here in a little bit. If we
Yeah.
just let
Right.
it play
But
out, let
in
it bake a
prior
little bit.
times, the truce with the Ukraine would be, a month's worth of
Right,
news reporting. And
right.
now with all the other topics, you're lucky if you get a 5-minute segment on that. But that
Yeah,
alone is worth history making
yeah.
acknowledgement.
And I've always, from the beginning, been a supporter of Ukraine. We certainly don't want Russia being able to run roughshod over countries on their borders. But someone told me, I think it was like 2 years ago, a gentleman, Mr. Lunt, actually runs Lunt Capital in Utah.
Yep.
Uh, he lived in Ukraine for quite some time,
Hmm.
and he said that government was a bunch of mobsters, and it was they were
Hmm.
all crooked. It was
Yep.
mafia type thing, and that's what Trump said essentially.
Hmm.
Now that doesn't
Hmm.
mean we want to give Russia everything they want, of course, but
Right.
needs to be a
Right.
change over there as well. Fundamentally.
Yes. And I do think the other remarkable feature of this is the bluntness by which President Trump discloses his thoughts about all
Yeah,
this.
no filter.
It yes, no filter. Uh, he's a bright man, and I'm sure there's a purpose to that. And we'll see how this plays out. But so far, it looks very, very promising, at least on the
Yeah,
Ukrainian situation. I think most investors are amazed at the speed at which this thing might be coming to an end.
yeah, it's incredible, really.
Hmm.
And it's funny when he first mentioned a deal for rare earth minerals and petroleum with Ukraine. Zelensky's first response was, "No way! We're never going to do
Hmm.
that." Well, obviously
Hmm.
they've come to the table. Now, getting
Yes.
back to
Yeah.
the inflation number, uh, I yeah, and I'm just a small town, investment advisor. I really try to piggyback on the consensus of the opinions of people I listen to, and I'm on calls with and what have you, like people like yourself. But the feeling I get is that the 2% goal of the Fed for inflation was unrealistic. I don't think we're going to get there. I don't think we can sustain that over time.
I
What,
agree.
what
Yeah.
inflation number do you believe is realistic to going forward?
I totally agree with you. I have driven myself into great frustration with that number, 2%, that is being, repeated for years. And so I got curious enough to explore where that came from. And I think your audience will be surprised to find out, if they don't know already. I mean, I certainly didn't know that it was in Iceland or Greenland, one of the two places. I think it actually was Iceland. There was a televised show about economic development. And one of the guests on there, I swear to you, this is the origin. It was one of the economic officials said, we look for about 2% growth. And for some reason, that took a life of its own, migrated to the US, and that's where we've gotten this. It was a random
Wow,
discussion from somebody not even in our country. And it has enough legs that now we talk about it as if it is sent down from the heavens, that this is a natural law,
that's
2%.
ridiculous.
And I agree. I think 2% is way under what you could um,
Yeah,
attain with the tools that the Fed has. And frankly, while I'm complaining about this, I would also tell you this. I was driven crazy when the 10-year Treasury was slightly higher than it had been during COVID. And people were saying rates are so high. I mean, I think a normalized 10-year Treasury should be in the range of 6 to 8%. That's what I grew up with.
hmm,
And for people to say that that would be an exorbitantly high rate, they just don't have history in
yeah.
their memory
No,
banks to realize
Peter,
that.
the historical average for inflation since we've been keeping records is
Mhm.
2.6%.
There you go.
Why would they
So,
think we could keep inflation below the average for the last 80 years? That makes no
yeah,
sense.
and especially in times like this where there are so many changes. I mean, one thing I did worry about as 2024 closed down is I thought, oh, jeepers, here we come with a new president that is touting tremendous growth. That's going to spook a lot of people because they're going to say, oh, I mean, this is also counterintuitive. You would think you'd like the growth, but then markets say, well, we don't like the growth because that means the Fed is going to raise rates and higher rates are bad. You can have growth and higher rates and everything would be fine.
Yeah, absolutely. And insurance companies need a higher 10-year. Uh, that's
Mhm.
that's kind of their bread and
Yes,
butter. They cannot invest as
that's right. Yep.
aggressively as other types of companies, and
Hmm.
so they have to
Hmm.
use the fixed instruments.
Yep.
And when the Treasury gets down into the ones and twos, man, it puts a
You're in
strain on
trouble.
their
Yes,
earnings.
exactly.
It
Their
really does.
liabilities or their assets. Yes. Hmm.
Mhm. Um, so, what do you see next 12 months?
Mm.
What are we looking at? Do you think? Get out your crystal ball and shine
Yeah.
it up. And
Yes. I would say that's the hardest question to ask these days since January
no, it's easy to
1st.
ask. It's easy
Yeah.
to ask.
Maybe to answer. Yeah. And I don't want to say it's anybody's guess because I have coined this phrase, the Trump put, PUT. And if you think of puts and calls, and stock options, a put is something that protects you on the downside. And
Hmm.
I do believe, even after all the negative things I've been saying, that President Trump is a great admirer of the US stock market. And beyond that, I actually think he uses it as a instantaneous assessment of his success, how he's doing, as a
Yeah,
evaluation, as a survey of his work. So
and he
I
loves to
expect,
get a back slap.
mhm, yeah, that's right. And I'm expecting that if this market were to go off the rails, then he would make changes to correct that market. And a lot of people are
Mhm.
not agreeing with me on that, but I do think the Trump put is alive and well. And that's what makes me sleep better at night is thinking, well, the market right now looks rather non directional, almost chaotic at some slices of time. But I have to remember that the people that are in charge are watching it like a hawk also, and they will
Mhm.
make mid course corrections if they need
Yeah.
to. So, given that, that's my foundation for my outlook. And I am quite optimistic. It's very hard to be optimistic right now during this broadcast because markets have really been rough, very rough over the past several days. And I could see that volatility remaining until we get some clarity about the direction that the president is actually going to take. Are the tariffs going to be implemented? How are the Doge firings going to trickle through the economy? What is it going to look like for the unemployment? All those things are questions that we just have to wait. But all along, you can still use your investment process and you can ask yourself, are the stocks that I'm owning now stocks that I think 6 months from now, 8 months from now will be the best stocks to own? The answer should
Mhm.
always be yes. If not, then I would do some house cleaning.
I think the consensus number one is growth is going to do better in this market. Of course, it's easy to say because growth typically outperforms value. I mean,
Yes.
most
Yep.
of the time, I mean,
Hmm.
what 70% of the time or so. But tech, I think, is the area that most people are looking at to possibly outperform. It just depends on which particular techs you're looking at, but
Hmm.
um, we'll just have to see what happens, basically.
Well, however, we do have to talk a little bit about artificial intelligence, the topic that everybody, including the shoeshine board, now is aware of, and
Hmm.
NVIDIA being shockingly, it's now a household word. When I bought NVIDIA, 10 years ago. 10 years ago, nobody knew what it was. And I've been a holder throughout the entire time. A couple of interesting observations I think that maybe others have not shared with you. The first thing is I'm starting to feel sorry. Yes, sorry for the CEO, Jensen Huang. Not from a financial perspective, of course, in a career, but this gentleman started a company probably 15 or 20 years ago, not with the idea of being on the front page of Time magazine as the AI guru that's going to lead us out of this desert, but as the man that had a true love for gaming, and computer chips for that. And so, over time, he finds himself in that long distance away from what he first was doing. Just think of that he is now the AI expert. And I don't think that that's going to have a material impact on the company, but it is something I think about in terms of how the company has morphed over time from gaming chips, then it was a cryptocurrency miner. Never thought he was going to use it for that. And now it's for artificial intelligence, or what people are calling generally AI. I don't believe the general definition of AI. So
it's mega computing is what it is.
Very unusual position to be in right now.
Mm-hmm. Yeah, I actually read or heard a story recently. People have been talking about China being a drag on NVIDIA because of the limitations our government has put on the kinds of chips they can ship over there. But the vast majority of the business that NVIDIA does is not those AI type chips. It's the chips for, like you say, the games and cars and other industries and things like that. Yes. That's where they're making their bread over there.
Mm-hmm. Yes. But he's now cast, I mean, the pressure put on that company's earnings. I don't think I've ever seen anything like it with the countdown clocks that people are using. They actually start talking about the earnings announcement 2 days before. It used to be 1 day before. Now they were talking 2 days. So the pressure and the anticipation as a bellwether for the rest of tech out there is extraordinary. And lastly, I will tell you this, that with my background in physics, I do feel comfortable telling you that I have a fairly good understanding of the technology and artificial intelligence and the quantum computing and all the stuff that's out there, the big buzzwords. And a lot of it, I would just say to potential investors, just buyer beware. There's a lot of sensationalism in those stories. And if you were to understand the science and really look at the technology, you would say to yourself, this is not anywhere near the way the media has interpreted the progress to be made so far.
I understand. I appreciate that. Peter, it's been great. I always enjoy speaking with you, and I'll make contact. We'll do it again in a few months. Hate to monopolize you. I know you'd rather be here than CNBC or Fox Business or any of those other small timers.
Well, you are speaking the truth. I mean, the big media outlets, they're so pressed for time. You don't even really get to express, I'm sure you've seen that, you get to express a whole thought before you're just cut off because of the constraint and the short time bursts that they have. So it's actually far more enjoyable to have a format like this, and I appreciate being invited on.
Well, thank you very much, Peter. That was Peter Anderson, and we'll have him back on again. And I don't have music in my ear, but I'm sure it's there any second now because I'm looking at my watch and there it is. Aha. And I appreciate your joining me. Hope you learned something. I know you can go on YouTube channel, Financially Speaking NC on YouTube. Watch this again if you want to watch what Peter has to say one more time. And as always, this is Jim Taunton helping you make all of your financial decisions good ones. Good night, everybody.